listen-only mode.
Hi, my name is Rob Donaldson. I am a real estate attorney in Mount Pleasant. I'm going to talk about the new HUD and the new GFE from a closing attorney's point of view. Since January the 1st, 2010, real estate attorneys have been required to comply with new RESPA violations that materially affect the good faith estimates prepared by lenders and the HUD-1 settlement statements provided by closing attorneys. Remember that HUD is the United States Department of Housing and Urban Development, and RESPA is the Real Estate Settlement Procedures Act. So we have federal oversight for all that we do. RESPA is a consumer protection statute designed to help consumers become better shoppers in the home buying process. It also aimed to eliminate kickbacks and referral fees that the government believed unnecessarily increased closing costs. On January the 1st, 2010, HUD required that lenders and mortgage brokers provide customers with a standard GFE that clearly discloses key loan terms and their closing costs. Closing attorneys were required to provide borrowers a new HUD-1 that clearly compares the consumer's final and estimated closing costs. I'm going to talk about the new GFE first, then the new HUD-1 changes. Then I'm going to go over the seller and the buyer side of a typical closing HUD from a closing perspective, and then I'm going to close with a few loose ends. While bank good faith estimates of closing costs have been available for years, no uniformity existed, so it was difficult for a buyer to compare apples and apples. The improvement in the new GFE centers upon the standardization of the form, the grouping of fees, and the implementation of tolerance limits for the variations from the GFE to the final closing costs. First, the form. The new GFE has been designed by HUD as a 3-page standardized form that gives loan terms and estimated closing costs. The consumer should be able to easily and more accurately compare the GFE from a various lender to another lender when he or she is shopping for the loan. The fees. New GFE groups certain fees together. The consumer can then see a total cost for a category rather than a random list of miscellaneous fees. The origination charge is the total of all fees incurred for originating the loan. Previously, this charge would have been broken down into an underwriting fee, a loan processing fee, a commitment fee, a doc prep fee, and so on, all payable to the lender. Now it's simply charged as an adjusted loan origination fee. Required services selected by the lender, such as appraisal, credit report charge, flood certification fee, and a tax service fee, are all grouped together, and each charge is listed separately. Title services includes the closing attorney's fees for a lender's title insurance policy, attorney's fee, title search, title insurance commitment, and all other fees paid to the closing attorney. The cost of an owner's title insurance policy is listed separately because, of course, that is an optional coverage. Required services that you can shop for would include a survey, home warranty, termite letter, and so on. These fees are not controlled by RESPA tolerances. The tolerances. The new rules allow that the final charge on the HUD statement can vary from those on the GFE only as follows. The origination charge must match exactly. There is a zero tolerance for the origination charge. The next 4 categories: required services selected by the lender, title services, required services that you can shop for if a borrower uses a provider other than that which was required by the lender, and government recording charges there is a tolerance limit of 10% for the total of those charges. For the initial escrow deposit, interim interest, prepaid insurances, there is no tolerance limit for increases from the GFE to the final HUD. Any service provider selected by the borrower rather than the lender is not subject to tolerance limits, and of course there is no restriction for a decrease in fees. The violations. Completion of the GFE and staying within the tolerances is the obligation of the loan officer. He or she is bound by the GFE. Prior to closing, the loan originator can revise the GFE because of changed circumstances affecting the closing costs in excess of the tolerances, or the GFE can be revised due to a borrower requested change. A violation of the RESPA required GFE tolerances can be cured by a loan originator by reimbursing the borrower the amount by which the tolerance was exceeded at the closing or within 30 calendar days of the closing. The new HUD 1. I'm going to look at a generic HUD statement, and I'm going to look at lines on page 2, starting with the bank fees in the 800 section. This is a generic HUD. I want to point out that Walker-Jackson typically does not charge a loan origination fee, so while we have origination fees and miscellaneous fees on this example HUD, it is just an example HUD for our purposes. The key changes to the HUD begin on line 801, our origination charge. It includes all charges for the loan origination except points. It is shown outside of the hot column. Line 802, your credit or charge, points for the interest rate. It can be shown as a credit or a charge, and again is shown outside of the hot column. On line 803, the adjusted origination charge is the sum of 801 and 802, and it's shown in the hot column. Lines 804 through 808, we follow the bank instructions as to third-party charges and either collect or we show as POC. You can see that 804 through 808 are the standard appraisal, credit report charge, tax service fee, and flood certification fee. Down on line 1001, setting up the escrow account. The sum of lines 1002 through 1007 minus the aggregate adjustment on line 1009. We showed the amount in the hot column, but the itemization is inside. You can see that here we are collecting, for our example, 3 months worth of homeowners insurance, 9 months worth of property taxes, and 3 more months worth of the flood. The sum of those 3 numbers then exceeds what the lender is allowed to hold in the escrow account, so the aggregate adjustment on line 1009 is a credit back to the buyer of $361. So the sum of those 4 numbers is the total that's in the hot column, 2509. Line 1100 series, line 1101. Line 1101, 1474. That is title services and lender's title insurance. It includes all of the title charges by the attorney: title exam, title search, doc prep, title commitment, lender's title insurance policy, courier fees, and so on. Everything is lumped on that one line item. Line 1102, settlement or a closing fee. If there were such a fee, it would be included in 1101, but shown outside the column here. Line 1103, owner's title insurance. It is an optional coverage, of course, and it is shown inside the column. 1104 is the lender's title insurance. It's the cost of the loan policy, and it's shown outside the column. 1107 and 1108 is the breakdown. It shows the agent's portion and the underwriter's portion shown in dollar amounts outside the column. Jumping to page 3 of the HUD, we see the comparison of the GFE and the HUD 1 charges. Again, you've got lines 801, 802, 803, and 1203 cannot change. Those have to match from the GFE to the HUD 1. Lines 804 through 808, 902 if it applies, and line 1201, those cannot increase in aggregate by more than 10% from the GFE. If they do, then there has to be a cure, as I said earlier, either on the HUD or within 30 days of the closing. Charges that can change: the prepaid items in the 900 series, the escrowed funds at line 1001, title charges if the lender did not select or identify, but the buyer chose the provider, and the 1300 section as long as the borrower selected the provider other than one identified by the lender. Looking at the HUD statement in more general terms, starting up at the top of page 2, looking at the seller's side. In the 700 section, always check your commission. And I don't say that jokingly, but I say that seriously. We don't know what the total commission is or what the split is, and we rely on y'all to tell us. Likewise, make sure that the earnest money is being held. Back one more. There's the 700 series. Likewise, make sure that the earnest money is being held as it is indicated. We get that information from the contract, but sometimes the contract is not correct. Many attorneys will show the earnest money deposit as retained by the broker as a charge to the seller on line 506 on the front page. This often confuses the seller as they are believing that they are charged twice. The balance of the commission is charged on line 703 in recognition of the fact that one broker is holding the earnest money deposit shown on line 506. Continuing on the seller's side, deed preparation, courier fees, overnight fees, wire fees are all pretty normal, shown on line 1109 and 1110. Line 1202 is for the satisfaction of each recorded mortgage. Line 1205 are the deed stamps based on the sales price of the property. The 1300 section would be for seller paid charges like a CL100 letter, home warranty, repairs. Total seller closing costs from line 1400 comes to the front page. Staying on the right-hand side, line 401 is the sales price. Then we add in any credits due to the seller, HOA fees already paid on line 408, flood insurance policy that the buyer might be assuming on line 409, for a total due the seller on 420. Then we add up the seller's costs. Closing costs from page 2 is on line 502. First mortgage payoff on 504. Remember that an attorney will typically add a few days of per diem to that payoff. Any overage collected will be returned to the seller by the bank. Remember also that interest is paid in arrears. So while the seller believes that he only owes X, he really owes X plus the accrued interest from the first of the month. We pay off any other mortgages or any other liens. We charge the seller taxes for the first portion of this calendar year, typically based on the previous year's bill, and any other charges to the seller, like seller paid closing costs on line 513. If the transaction is a short sale, many attorneys will put the amount due the short sale lender on line 514, 515, because they are truly not payoffs as indicated on 504, but they are release amounts. Subtracting total costs from the total credits leaves the seller with a proverbial bottom line figure on 603 as either cash to or cash from the seller. Looking at the buyer's side, going back to page 2, briefly, we've already looked at the 800 section, which are all of the bank fees, and the 900 section, which are all of the prepaid items. 1001 then, setting up an escrow account if it applies. The bank will collect what seems like odd numbers of months of taxes and insurance, but remember that the bank is intending to pay those bills as they come due during the course of the next year. Tax bills being payable in the month of December, insurance typically being due 12 months from the date of closing. The aggregate on line 1009 typically causes a buyer a question, but again, remember that the bank can keep a 2-month cushion of extra funds, but that's all that they are allowed. So while the bank will collect funds with one hand, it then gives some back with the other hand to balance the new escrow account. Line 1101, again, title services and lenders title insurance, as we have seen, is the total of the attorney's fee, title search, title binder, lender's policy, and any other attorney's fees. For an FHA or for a VA loan, fees might be renamed, relocated, or combined to comport with more specific government guidelines on those loans. Line 1103 is the owner's title insurance policy. Title insurance, as you all know, is a seminar unto itself, but we always recommend it, and we're always available to answer title insurance questions prior to any closing. The 1200 section is for recording fees. The deed and the mortgage are $10 for the first 4 pages and $1 for every page thereafter. The 1300 section, as we said, is the catch-all for termite letters, home warranty, neighborhood transfer fees, home inspection, invoice, survey, elevation certificate. We can add additional lines as necessary. Deed stamps are 3.7 per $1,000 of sales price, rounded up. The total of the buyer closing costs then on line 1400 then comes back to the front page. On line 101, we have a sales price. If there were a separate charge for a car or for a boat in the contract, it would go on line 102 as a personal property. Line 103 is the carryover from page 2. Line 108 and 109 would be charges to the buyer for items already paid by the seller, HOA fees typically, buyer assumed flood insurance, giving us total costs from the buyer on line 120. The 200 section is a total of buyer credits, typically beginning with an earnest money deposit. Again, please make sure that the amount listed on the contract matches what's on the HUD as the amount actually given and is being held by the broker indicated on page 2. The new loan is listed on line 202 as a credit. If there were a piggyback second mortgage, that would be identified as a credit on line 207. Lines 204 and 205 would be used for any cost to cure credit, from a GFE violation. It's also reimbursements from the lender for a prepaid appraisal or any other lender credit given there. 211 is a tax credit from the seller for the first portion of this calendar year. If tax bills are out, meaning a closing in October, November, or December, it would not be a tax credit on line 211, but rather a tax charge on 107, charging the seller for the first portion of the year, charging the buyer for the last portion of the year, and paying the tax bill if it is out, due, and payable. Line 213 is a good place for seller paid closing costs. For total credits on the buyer's behalf, line 220, in this example, 260, 145.89. Subtracting total credits from the total costs gives us line 303, which is typically cash from a borrower. Loose ends. There is a line by which an agent can give a buyer a commission credit, but that is typically a bank approval issue and not something that should be done arbitrarily. If your seller is dead, please tell us. The deceased is not your seller. His or her estate is, and last-minute notice of decedents and estates can cause complications and can often delay things. A buyer who wants to take title in a trust or in an LLC, we need to know. His bank needs to know. We need to review the trust agreement or the corporate docs. Same with a trust as a seller or an LLC as a seller. We need to ascertain authority, and we can only do so by seeing the trust agreement or the articles of organization or the operating agreement. If your seller is out of state and not planning to come to the closing, we need to know. Likewise, does he or she know about the 7% South Carolina gain issue? Powers of attorney. They can be done quickly, but we need to know. The document requires 2 witnesses and a notary public. It doesn't matter that your seller is in Iowa and that state doesn't require 2 witnesses. The document is being recorded here, and we do. Remember also that a power of attorney doesn't work for an estate or for a trust. The personal representative of an estate or the trustee of a trust, those are fiduciary positions that cannot be assigned vis-a-vis a power of attorney. In closing, your job is hard. The mortgage lender's job is hard. Our job as a closing attorney is hard. Therefore, we have got to continue to work together. The lines of communication must stay open. Please call me with any questions. And Liz says, type in a question if you have one, and we will answer as best we can. Thank you all very much. Okay. On the HUD, that page again is the comparison. It's as a closing attorney in a closing, we don't go over that page because it's the lender's GFE comparing to our HUD, and again it had to match the tolerances or there would be a lender credit on the front page. Looking at the next page, again, typically as a closing attorney, I'm not going over that page because I'm going to go over the note, and this is mostly loan terms, loan amount, duration, interest rate, P&I payments. I believe it's more appropriately shown when I go over the note and we are signing the note. but everything is on the HUD statement now for all to see.
Question says, can you please explain the agent portion of title insurance a little bit more?
Yes. Back on page 2 of the HUD statement, on line 1107 and 1108, there is a question as to what the agent's portion of the title insurance premium means. When we have a purchase transaction, the agent-owned company is writing the lender's and the owner's title insurance through its title insurance company, which is currently Southern Title. The portion of the premium that is collected, well, let me rephrase, the total premium that is collected is then apportioned to the agent, which is the agent-owned company, and a portion to Southern Title, who is the underwriter. Much like a Nationwide agent or a State Farm agent or an Allstate agent writes a policy and gets a commission, so to speak, for the writing of the policy. The title insurance on 1107 and 1108 designates how the total premium is being split. Hope that helps.
Okay. Tell Rod he did a great job. Thank you. Steve, so can you explain the 7% gain tax for out of state? Is it no matter what they pay 7% off the top of the net?
There is a 7% gain question. Remember that with your out-of-state sellers, there is a South Carolina statute whereby the state Department of Revenue wants to get into the pocket of your out-of-state seller. But it is for gain, not for net proceeds, and there is a significant difference. In looking at your gain, a seller has to look back at his purchase price, look back at his original closing costs, look back at his costs to sell, look at any capital improvements that he made during his ownership. So we're subtracting all of those things from his sales price. If there is still a gain on the sale, if it's still a positive number from the sales price, minus his purchase price, minus his closing costs to sell, minus his closing costs when he purchased, minus any capital improvements that he made to the property during his ownership, then we are obliged to remit 7% of that number to the state of South Carolina pursuant to the statute. Oddly, the statute is written in a manner that it is the buyer's responsibility that the seller pay his 7% tax. So it's actually the buyer that signs that, I believe it's an I-290 form, but it's the buyer that signs and the closing attorney that remits based on what the seller, based on the information that the seller has given us. And the buyer is allowed to rely on the affidavit that the seller signs stating what his gain is.
Is there a form that they can sign if somebody's out of state? Is there a form they can sign rather than having the money withheld at closing?
That question has often been asked in military circumstances. And are there any sellers that might be exempt from the 7% tax? And again, just because it's an out-of-state seller, the first thing that I want to do is to do the math and see if there is, in fact, a gain. In this day and time, there may well not be a gain, even if he has significant net proceeds. There has been a question for many years as to whether military persons were subject to the 7% gain. I'm afraid that I have done it both ways. There have been instances where I have charged a military seller, and there have been times when we have not charged. But again, we want to go through the total costs and the total expenses and have a sharp pencil when we look at whether there is, in fact, a gain or not. The last thing that I, as a closing attorney, want to do is to remit additional funds from a seller to the Department of Revenue. I've also been informed that as an out-of-state seller, There is also a mechanism by which an out-of-state seller can file a non-resident tax return and maybe get some of that money back. That's more of an accounting question and not a legal question. But again, I would look at all of the angles when you're faced with an additional tax.
Okay, tell them that I'm going to include a PDF of this session
Okay.
on the website when I put the recording there so they can review it.
Liz is going to put a PDF of the session on the website so that y'all can review this at your leisure. And thank you all very much. Again, if you have questions, my phone number is 881-8400. Thanks so much.